Welcome back to the Sovereign Ratio. Today we're going to talk about Bitcoin, the next bull run, and the halving date, and my strategy for that, whether it be purchasing Bitcoin or purchasing altcoins, or what I'm planning to do. If you're looking for some long-term analysis and maybe to come up with a long-term plan of your own, stay tuned and take a look at mine, and maybe we can work through something together. If you're new here, please hit the subscribe button, the like button, and leave me a comment below. I don't know about you, but I am sick of seeing $29,000. Here on Live Coin Watch, we can see the Bitcoin still hovering around that 29,200 level, which it's been at for seemingly an eternity at this point. But in reality, I think it's been about 6 weeks or so. Still nothing really to talk about in Bitcoin other than the big news that we've seen recently with BlackRock ETFs and legislation passing through the Congress and so on and so forth, but we've seen very little price action. We'll take a look at the charts here in a little bit, but we're also going to take a look at the long-term view, most importantly, so I could present my view of what the next bull run is going to be like and why I do think this is going to be probably the last giant bull run that we have going forward. And I think that there's a lot of preparation that needs to be done for next year by whoever's going to be investing in crypto assets in order to make the most of what's coming out. This is going to be a very TA focused episode, so I want to take a look at a very long-term view using only a couple of things. One, vertical gold bars indicating previous Bitcoin halvings and the upcoming Bitcoin halving, and also the Gaussian channel on the weekly. For now, that's enough to look at before we delve into a little bit deeper stuff. This should really give a broad view of what to expect based off of historical data. That doesn't mean that it's always going to be like this, but history tends to rhyme even though it doesn't repeat itself completely. Because it's so difficult to actually put a vertical line and do a measurement on the trading view chart for that kind of gain, let's put it into perspective. In the last bull run, we'll just call it $69,420 that Bitcoin hit on its peak versus 1 cent in 2010. That is a 6,942,000% gain. If you had been one of the lucky people to first purchase Bitcoin at 1 cent, if you would have put $1,000 into it, you would currently be holding $6,942,000,000. That kind of gain is beyond anything that's ever been seen in the likes of human history. All the way back to gold, all the way back to whatever came before gold. The thing about gold is that it was free, other than manual labor for people to find it at first, but 1 cent in this economy is pretty much free. So there's never been an asset since the discovery of gold that has yielded even close to any sort of return like what Bitcoin has. I want to repeat, that is 6,942,000% since 2010. That's the span of 13 years. Just think about that. The fact of the matter is that Bitcoin actually yielded a much larger percentage return than that, but I'm not going to go through and try to figure out what it was under 1 cent, because for a while Bitcoin, almost a year actually, Bitcoin was tradable under a cent. So that percentage is much bigger than what I presented, but I'm just using 7 million% as a rough figure. Like, we don't really need to look at more than that, right? I think that's pretty accurate and pretty representative of what the asset has done in an unbelievably short period of time. In fact, I drew a red line here to indicate the first time I heard about Bitcoin. I was working a job that I absolutely hated at a big box retailer selling carpet. And I remember somebody that I worked with talking about Bitcoin, and I thought to myself, that sounds stupid. It's not even real. It's just something that, like, why would you want that? I need greenbacks. I need something real that I can physically trade. And man, I wish I would have listened to that guy back then, because in 2010, if I would have bought a little Bitcoin, even $100, I probably wouldn't even be making YouTube videos right now. No, I'm kidding. I still would be, because I enjoy doing it. If you don't watch any part of this video other than what I'm saying right now, I would be totally okay with that. I need everybody watching this video to understand exactly what this means. The U.S. Securities and Exchange Commission accepts 6 spot Bitcoin ETF proposals for review. That includes BlackRock, Bitwise, VanEck, WisdomTree, Fidelity, and Invesco. These companies, these organizations cumulatively manage trillions and trillions of dollars. The current market cap of cryptocurrency is just over $1 trillion. The culmination of all of these spot Bitcoin ETFs could potentially lead to an exposure of $20 trillion. Now, they're not all going to invest all of their money into Bitcoin. That would be stupid or foolish to even think about that. But the fact that there are $20 trillion in potential exposure to Bitcoin on a $1 trillion market cap, we're never going to see like 7 million% gains on Bitcoin again. But it's so important to understand what is happening right now. I feel like the general public, 99% of people still don't believe in digital assets. Even though a lot of millennials do hold Bitcoin in small amounts, the general public has no idea what's happening behind the scenes right now. You have to understand and do your research into what's happening with Bitcoin ETFs and how huge this could potentially be. The largest asset manager in the entire world, BlackRock, is wanting to have a spot Bitcoin ETF. If there's anything more bullish than that, I have no idea what it is. Really, truly, I don't. Other than its outstanding return that it's produced since inception, the other very interesting and unique thing about Bitcoin is it's one of the only assets in human history that retail customers like you and I have front-run big institutions like BlackRock and Fidelity. BlackRock and Fidelity, if you would have looked at 6, 7, even 4 years ago, they were calling Bitcoin useless, trash, and now they're all in it. They're like, oh, this is the greatest digital international asset that there ever could be. And they're switching very quickly to understand that this is the future of finance, and there's nothing that's stopping it. There's way too much belief in it. There are way too many people that are on board, even though most of the world doesn't really understand that. This is the first asset in a long time that has been front-run by retail investors. And right now, everything that you're seeing, whether it's FTX, random lawsuits, random stuff in the news, government intervention, SEC bad news, all of that is junk. All of that is meant to keep you out of it, while big investors can get into it. That's my belief. I could be wrong, but my conviction is very strong. All of this junk that you see, the short-term bad news, it's all meant to keep you from buying it and to be scared, while bigger investors get into it because they know what's happening. There are a lot more details that I could go into, and I'm not going to do that in this video. The whole goal of this video is to show TA, to show what I see has happened in the past and what I believe is happening in the future. So we're going to go straight to TradingView. We're going to look at previous Bitcoin halvings first of all, including the Gaussian channel and perhaps the bull market support band and some other moving averages to kind of glean information as to what we can reasonably expect from the next bull run, most likely happening or beginning next year if it hasn't already. So first, very basic. We've had Bitcoin halvings in November of 2012, July of 2016, May of 2020, and the next one is predicted to be in April of 2024. If you don't know what the Bitcoin halving is, I will give a very, very brief explanation of what that is. Bitcoin is a proof of work mechanism, which means in order to produce Bitcoin or mine it, it has to be obtained from an algorithm, which is essentially like a network of computers solving a math problem. The longer this goes on, the more difficult that math problem gets, all the way up to the year 2140, whenever the last Bitcoin will be mined. Every 4 years, that algorithm gets much more difficult to solve, which requires much more computing power in order to do. As such, because it requires more energy, Bitcoin is essentially a function of energy. The more energy it required, the more value it has. And also the law of supply and demand kicks in because the Bitcoin halving occurs and much less is mined every single time, and all the way until the year 2140 when there's no longer any Bitcoin available to mine. That's the whole premise behind it, is that it's systematically programmed to increase in value. And it's also systematically programmed to not be able to be intercepted by other parties like governments or whatever. It is a sovereign asset, or that's what it was intended to be, is a sovereign asset. And I think we all know how much I feel about the word sovereign. So the very first Bitcoin halving, you can see it's marked here with the gold vertical bar. And the first time that Bitcoin broke through the Gaussian channel and secured it was 133 days prior to the halving. You can see after it broke through the Gaussian channel, it came back down to test the Gaussian channel and then went on a face-melting rally. Actually, before the halving was in November. The rally really started around August, or you could consider that the rally actually started back here in like October of 2011. But in terms of the Gaussian channel, I would consider the rally to start here in August of 2012. After it retested the top of the Gaussian channel, Bitcoin went on a rally of roughly 3,400%, ending in April of 2013. Before a retracement, back down to $65 in July of 2013. From the $65 retracement, it then went on another rally of 1,845%, ending in December of 2013, which was essentially the peak of that, what we would call a cycle. On this chart, the closest thing that I could capture to $7.50 was $8.71, which would put a total gain of potentially 14,200% just in that cycle, just from the top of the Gaussian channel, not including what came before that, which would have been exponentially higher than 14,000%. So now we need to start keeping track of dates, right? Since the peak of that first cycle, Bitcoin did bottom around 413 days later and eventually put in a basically duplicate bottom 630 days later. And that date is in August of 2015. The first date is in January 2015, which is just a little over a year. That's the magic number for Bitcoin in a lot of cases, is a year. The first bottom was about a year away. The second bottom was about a year and 3/4 away in August 2015. This makes the total bull run from the break of the Gaussian channel to the top of the bull run around 476 days total. For the next bull run, the definitive break of the Gaussian channel on the weekly chart was in November of 2015, which lasted 742 days until the peak of the next bull run in December of 2017. At the time Bitcoin broke through the Gaussian channel and held it for the second time, it was around $350. I could not capture that on TradingView because of the percentage gain overall on Bitcoin, but I did get it at 363 for a total on that bull run of 5,350% from the break of the Gaussian channel, not from the break of the bottom, which again would have been exponentially higher than that. Just a minute ago, we talked about the importance of the 1 year mark from the peak of the bull market to the bottom of the bear market. And in this particular instance, the bear market stopped and bottomed out in December of 2018, 364 days, very, very, very close to a year, at approximately $3,130 when the previous peak was $19,750. 1 year, almost to the day exactly, Bitcoin bottomed out again for the end of the bear market in that cycle. Now, in this next cycle, there is a unique situation in the fact that we had the flu dump here in March of 2020, but from the first break of the Gaussian channel on this next cycle in June 2019, it was approximately 679 days until the first Bitcoin peak here at $65,000 and 889 days until the second peak at $69,000. Had you have purchased Bitcoin, however, at the actual bottom here, 364 days after the previous bull market high, you would have still purchased it at a lower valuation than you would have on the flu dump, which bottomed out around $4,000, the previous bottoming out around $3,300. The total potential gain in this cycle being 823%. Now also, because of the unique situation with being a double peak, you could have an argument about a potential 745% gain and then a drop of 55% to purchase it back again at 29K, and then another gain of essentially 137%, which would have been very, very nice for somebody that capitalized on that completely. This was a unique situation, however, that was heavily influenced by other economic factors. Now, to me, this is the most single interesting piece of data that we have from the previous cycle. As I indicated, the bear market tends to be between 1 year and 415 days, depending on previous data that you're looking at. Back in this last cycle, there was a lot of talk about, well, where does the cycle actually begin and end because of the double top that we had, with the second top being a little higher, right? Well, interestingly enough, if you take it from the second top at 69K, it's exactly 364 days till the next Bitcoin bottom in November 2022, right after the FTX dump at $15,500. To me, there's way too much confluence there to ignore the fact that the actual top was the second peak and not the first one. In my personal opinion, what happened is the first peak was supposed to be below off top, as we've seen in the past, but a lot of the news surrounding Elon Musk and some other economic factors that we had then did cause the market to crash, from a lot of retail investors being scared, institutional investors taking profit, and we saw that giant dump in May of 2021. I'm guessing most likely the entire cycle was meant to be much larger than 800%, since the previous two cycles were 15,000 and roughly 6,000%, I would imagine that it was probably supposed to be in the neighborhood of 2,000% instead of 800%, just based off of sheer mathematics. Because I'm utilizing these figures as a function of a retest of the top of the Gaussian channel after a break, 2,000%, oddly enough, would put Bitcoin right at $150,000, which is what many analysts considered that it would hit in the previous cycle, and was definitely cut short. I'm not saying it was definitely cut short, but they are saying that it was definitely cut short as a function of economic factors. But to me, there's a lot of confluence there, right? Like, if you cut 15,000 in half, you get around 7,500%. You cut that in half, you get around 4,000%. You cut that in half, you get around 2,000%. The function seems to be at diminishing returns, but it makes total sense that Bitcoin probably was intended to hit around 150,000 in the previous cycle, but stopped short at 69K. Also interesting to note is that in the previous cycle, the amount of time that elapsed between the actual bottom and the Bitcoin halving was roughly 511 days. The Bitcoin halving, the next one, is currently anticipated to be in late April, actually April 26th. And if we consider the bottom, the true bottom, to be here in November of 2022, it's 518 days until the predicted halving, which is just more confluence to lead me to believe that I have a guideline for long-term planning for both Bitcoin and altcoins. There's too much confluence here to deny what's happening. That being said, you can see that Bitcoin on the weekly chart has finally broken through the Gaussian channel and performed its retest of the top of the Gaussian channel. Not only that, it's also retested the top of the bull market support band. I'm not saying that Bitcoin can't break back into this Gaussian channel and even go back and retest previous lows, but what it's doing right now is following exactly what's happened in previous cycles. And for me, I have to continue to follow the data that I have versus trying to come up with new data. Maybe I'll be surprised with what happens and then I have more data to go off of, but right now I only know what I have from the past. In 2019, there was a run-up of approximately 85% after Bitcoin bounced off the top of the Gaussian channel. In 2016, there was a 124% run-up after Bitcoin bounced off the top of the Gaussian channel. Since 80% is roughly 2/3 of 120%, the only thing I have to believe is that this is going to be 2/3 of 80%, which is right around 55%. So if we take the top of the Gaussian channel, run up 55%, we get 44K. And a lot of people think that Bitcoin is going to go to 45K, so that makes a lot of sense. The other thing that we've been watching pretty heavily on this channel is the simple fact that in previous cycles, Bitcoin has come up to the top of this cup from the previous run-up, right? So that sits here around 47K, and I've had a target for this run-up of between 37 and 47K. TA says that somewhere it would fall in there. Now that doesn't mean that Bitcoin can't just do something different and dump tomorrow. I have no idea. But what I know is what I've seen in the past, and I could easily see Bitcoin going up to somewhere between 37 and 47K. TA would lead us to believe around 44K. Now that being said, some factors don't look great, right? On the weekly chart, the stochastic is getting ready to cross down. You know, we've seen bearish divergence on the weekly RSI with a higher price here and a lower RSI here. You know, Bitcoin can surprise us and run up hard out of nowhere, but right now TA doesn't look good. So I feel like the market is doing its very best to try to scare people one direction or the other. As Benjamin Cowan would say, it's going to fully wreck the bears and it's going to fully wreck the bulls. So right now it's a very strange time, especially with everything that's going on from an economic perspective. Bitcoin has never seen a recession. Bitcoin has never seen the likes of $13 trillion of potential spot ETF exposure. Nobody really knows what's going to happen, and I think that's what everybody's trying to accomplish, is to scare retail into not knowing what to do. So, I say that all for this reason. The halving is in late April of 2024. The best time to buy Bitcoin, historically, surefire, has been somewhere between a month before and a month after the halving. So in my opinion, somewhere between March and May of 2024 is the least risky place to buy Bitcoin or other altcoins. Most likely, if you want some higher risk, some exposure to potential bigger gains, altcoins typically are at their bottom by then as well. So maybe it's worth it to put 50% in Bitcoin and 50% into some good altcoins, like say Chainlink or Filecoin or Cardano or Vulcan Forged or Gala Games or whatever you're into. But for me, the safest place to buy any crypto asset is between March and May of 2024, and that's fully what I intend to do. Right now, I have nothing but Bitcoin, and I don't intend to have anything but Bitcoin because I don't know what's going to happen. And for me, altcoins are too risky. Total 3 looks not good. The ETH BTC pair looks like it wants to fall off of a cliff. It could go down 30 or 40%, and altcoins could follow it down 30 or 40%. I just don't see a point. I'm not a Bitcoin maxi, but I don't see a point in holding anything other than Bitcoin right now or some sort of stable coin. But between March and May of 2024, I truly believe that's going to be an opportunity that people don't even know is going to happen. This potentially could be a bigger bull run than previous ones because the previous one got cut off, and now we have all these trillions of dollars that could potentially enter the spot ETF space. So that's my opinion, and I think that's what the best plan is. So in the next video, what I plan on talking about is a very small window of time between when Bitcoin begins its ascent up in the next bull run to when altcoins begin their ascent up in the next bull run. So you can find a trigger point to see where Bitcoin starts to take off right before altcoins do. So you can potentially look at putting money in altcoins toward the bottom around the halving. If you're new here, please hit the subscribe button, the like button, leave me a comment below. I appreciate every single one of you. I'm having so much fun growing the channel. I want to continue to make content for you and potentially expand into other topics. So if you're new here, please do that, and safe trading. We'll see you in the next video.